Good afternoon, everybody. This is Mark, and we're back here for the daily recap. What's this market doing? Well, it's really the MO is, since the beginning of the year, we've basically been hanging up here, in my opinion, a bull flag. Obviously, the intraday action is not as violent and as exciting as I think people want, but overall, most stocks are intact. Overall, the overall market and all the indices are intact. Actually, the Russell IWM is hanging in the best. It's at highs and it hit new highs today. The Q's lagging a little bit for obvious reasons. The main reason is Apple. Certainly, it's a big part of that. And the spiders are hanging in there, and the big part of that is the banks, which is obviously showing leadership. So today, basically much of the same. The VIX continues to go down. VIX is now below 14, is 13 and change. And people are not scared. Does that scare me necessarily? I'm not so sure yet, but I think as earnings start to come out, the cream begins to rise to the crop and the other stuff falls by the wayside. Leadership certainly is the banks, and we're going to get a look over the next 2 days, with Goldman Sachs, JP Morgan, Citi, Bank of America starting to come out and see if we can have some more follow through if the market wants some more action, at least early on in this year. Some trades today. We've been talking about Facebook, and quite frankly, buy the rumor, and it really wasn't buy the rumor because the rumor didn't come about till probably 3 days ago, 4 days ago, maybe a week ago. Technically, it was a good buy. We were talking about around 25, 50, 26. And into that news, the 32-ish, it was a sell the news. And, the news, again, it sounds like interesting news. I don't know if it was blockbuster material, but should make a higher low from a trading perspective, and Facebook is fine. If it gets back down to 28.50, that's great. That'll be the place I'll look to be involved. If it actually stays above 29.50 for a period of time, I'll probably get back involved. I did put, I took off all my stock, and I actually took some shorts today, just from a trading perspective. Didn't take anything overnight. Still holding some options long term. Think it's fine. I think it's going to be buyable on pullbacks. I think you just got to be patient, and we'll wait and see. Apple, the stock that now everybody hates. Isn't that funny how things happen? It certainly was the most talked about stock last year. One of the best performers, at least, until it had the hiccup, late in October, early in October. Now it's the stock everybody doesn't want to own. It was overowned. Now it's going to probably be underowned. But it's momentum based, and it always overshoots. And you can look at the daily. You can't see a whole lot. It's closing below 500 for the first time in a long time. Technically, it's been bearish for a while. And you now have, on the weekly, I'm looking at around 478 is the 100-day. That first time around, the last time it's touched there, you got to go back to almost 2011, maybe 2010. So it has not touched there in a while. So in my opinion, maybe around 478, possibly. It's not an aggressive buy, but it might be a chance to step involved for a trade. Right now, technically, it's a broken stock, and it's such a momentum stock that, quite frankly, it's not going to change overnight like it did back in late November when it did that nice reversal, 80-point reversal. Not the same stock, not the same Apple was. Certainly needs to be on the radar. I didn't really do much with it today. If you shorted it, you obviously got paid. Broken pattern. All across the board, broken pattern. But when everybody starts getting so bearish after a 250-point move, 220-point down move, you get a little skeptical in that respect. Keep that in mind from a trading perspective. Some of the other high betas, Google hanging in there, had a nice little bounce. Actually gave you two opportunities, from a buying opportunity and another opportunity from a sell. Buying it close to 710, 712, 715. Talked about it on the radio today. Sold it probably early, 720 to 725, went to 735, came back down. Definitely gave you a trading opportunity. Earnings are coming out next week. We'll have to see. Still hanging in there, but we will have to wait and see with earnings. And, Amazon still hanging in there also. I do like how some of the Chinese guys, which we really, we talked about Baidu, and obviously showed some strength, over the last week and a half, regained some composure, hit its 200-day, regained its 100-day. We'll see if it can actually hang above 110 for a period of time, and I think that's interesting. If it does, And if it does, it's a good sign. And I love to have that back in play for a little bit because, quite frankly, for a while it was really not tradable and didn't give you a whole lot of movement. But with it moving out of this range, needs certainly some time from a 100 level to 115 to base. But probably I would probably take a shot if it gets back down to 105 or if it bases above 108, 110 for a period of time. Right now, it's just cash flow basis. And that's making the other stocks, Sina, which is right at its 200-day, hanging in there. Sohu looks great. NetEase, again, some big boys are coming back. You know, some of the Chinese guys, which are dead and gone, are coming back into play. Going with the dead, the dogs that are dead are starting to come back to life. They've been coming back to life, and this year has been a few of those. HPQ has had a good 4 or 5 day run, but you can see it. RIM, we talked about. We had it here. We were talking about it from a trading perspective. Moved nicely, obviously resistance-wise. And then Dell the other day, and today with follow-through today. Pretty impressive knowing that, you're getting some M&A action, possibly taken to private. Are others, others of, the 1999, 2000 era gonna, that used to be in play every single day, are they gonna come back in play? We'll have to wait and see. But I would certainly do my work and find those stocks out there that were in play. And, that could be a pattern. And again, as traders, all you do is look for patterns to find opportunities and try to take advantage of it. Gold and silver, not much there. Had a little bit of an up day, but excuse me. But from a trading perspective, not a whole lot to talk about overall. Lulu obviously gapped down on pre-announcement, even though the pre-announcement was okay. Hung in there. We'll see if it can hang on the base. It held that level, that lower level base of 66. So technically, it's still at the top end of its trading range, and to me, still looks okay. Retail's been tricky overall. You can take your, hit or miss across the board. Cores looked okay today, but it has been hit or miss, and that's where we're at. Banks are certainly leading, and others should follow. Home builders, we had a little look at Len today. Came out with decent earnings, didn't do a whole lot, but it's still trading at the top third of its trading range. Some of the others, Toll, actually moved out a little bit. Ryland looks okay, and then you can go down the list of PHM, KBH. They look fine. Home builders look like they're in place. Obviously, the rally has happened early last year, so they've moved up a lot. It's in the late stages of a rally. Doesn't mean it can't continue. But understand the shake the tree across the board is going to happen. I was saying it's been very quiet. Yesterday's morning call, I said it's been very quiet in the news. We obviously now the debt ceiling I think is going to come back in play a little bit more. I think that's going to create some volatility at some point in time. I'm not sure when. We still have a few weeks to a month away from any sort of deadline. So as we get closer, you know how the politicians work. They're going to wait to the last minute. That's when all of a sudden the volatility will probably pick up. We're still a little bit away from that. So far, everything looks intact to me from a trading perspective. I think that's what you have to key. We're continuing to get rotation. You can say the banks are in play one day, then you go to the ags, then high beta. Be ahead of the curve. That's the key to trading. You got to do your homework. If you don't do your homework, you're obviously not going to get paid, and you're sort of going to be chasing your tail every single day. Momentum-wise, we're getting not as much as we would like to see intraday basis, but respect the fact the VIX is at 13. That's normally what happens. As the VIX goes higher, the intraday moves get a little bit more violent, and you get some more trading opportunities. Be patient, sit back, and wait for your opportunities. They're there in droves today, every single day, just figuring out where you want to be from a trading perspective. Like I said, you're getting some individual one hits. You had DEC today. What else moved today? I know a sector that I continue to like, DDD and SSYS, 3D printers, look good, growth stocks that are still growing. Every pullback has been viable. Keep that trend up until it's not working. And that's the MO of this tape. I'm not saying it's going to just, go up every single day because that's not how the market works. But overall, you know where the market is. The fact that we're actually hanging up here, the NASDAQ, obviously the other indices are hanging up there with what Apple's doing, it's showing that there's obviously rotation getting out of, big money today got out of Apple if it didn't already get. You could just tell how consistent the selling was. That to me, is a sign that the money obviously is going to go somewhere, and we'll have to wait and see where that goes. The next trade that I'm going to talk about, and it's something it's the biggest trade everybody's talking about, and it's just a matter of how you take advantage of it. TLT, TBTs, up to 122, I will be looking to short the TLTs as money starts to get out of bonds. Same go vice versa. TBTs possibly down to 62.50. Get back involved with the TBTs for a move back higher with the 20-year Treasury. That's where we're at, guys. I think everything's intact. I think a shake the tree is going to happen. I think we have, key earnings tomorrow morning with Goldman Sachs kicking it off. It's going to obviously dictate some of the move and the mood of the market. But overall, to me, technically everything that I've been talking about looks intact, but respect the fact that you can't get too complacent. You got to keep moving your feet. And you got to understand that we're not just going to go straight up. You're going to have a rug pull at some point in time. So you just got to be prudent of that fact. And we'll go from there. Hopefully you guys took advantage of some of the moves today. And obviously it's a little bit slower than I think a lot of people like. But it keeps you on your toes. And you got to adjust to what the market's giving you. Good luck. I'll see you all tomorrow.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.